The stock market is holding its breath. The major indexes sit within reach of all-time highs, and the entire tape is waiting on one number: Wednesday's inflation report. The next few sessions are a coiled spring, ready to snap the moment the data hits. Look at the futures board. Dow Jones futures edged lower by 0.1% to start the week, while S&P 500 and Nasdaq 100 futures posted slight gains after a winning week. That is a muted pause, not a reversal. Traders are unwilling to take on big new positions before the inflation data drops. This is not a sell-off, it is a standstill. The momentum underneath is real. Over the past 10 days, the Dow Jones is up 2.92%. The S&P 500 has climbed 3.51%, and the Nasdaq 100 leads the pack with a 5.09% jump. All three sit near record highs. So why does one report matter this much? Because the earnings calendar is thinning out. More than 80% of S&P 500 companies have already reported. With fewer corporate catalysts left, the market's focus shifts squarely onto the macro data, and Wednesday's consumer price index is the macro data. A coiled spring, one number decides which way it snaps. The Federal Reserve is the other half of this equation. Friday's surprisingly weak jobs report took some pressure off policymakers, but Fed officials remain divided on interest rates, and a hotter-than-expected inflation print could force their hand in an instant. Then there is oil. Iran just teased that a deal to reopen the Strait of Hormuz is very close. And at the time this video was made, Brent crude trades at $84 a barrel. Even with that bump, the broader trend points down. The United States Oil Fund is off 8.66% over the past 10 days. Here is why that matters. The Fed is actively monitoring the Middle East oil shock and its knock-on impact on inflation. A sudden spike in crude could bleed straight into the CPI data and rewrite the interest rate outlook before Wednesday even arrives. So the question is simple. Does inflation cool and unleash the highs, or does one hot print flip the entire narrative? While you wait, watch the AI trade. A specific pocket of tech steps into the spotlight. CoreWeave, Nebius, Cerebras, and Supermicrocomputer all report. These numbers are a direct read on the AI build-out, and they will drive the Nasdaq either way. 3 signals decide the week. 1, Wednesday's CPI print, and whether it comes in hotter than expected. 2, Brent crude at the $84 level. And 3, any shift in tone from a divided Federal Reserve. Growth stocks are the most sensitive to rate expectations, so the Nasdaq is your tell. At the time this video was made, $84 is the line on Brent. Stay near it and the CPI decides the week cleanly. Spike through it on a Hormuz shock, and the inflation narrative is rewritten before the data even lands. Weeks like this are exactly why a plan matters. At startwithtA.com, you get daily market briefings, real trade setups, and the levels that matter before the crowd sees them. Start your journey at startwithtA.com. The link is below. That's the briefing. Subscribe for daily market analysis from the Traders Agency team. This is education, not financial advice. Trade smart.